Welcome back, everybody, and thank you so much for joining me again this week. It is an absolute pleasure to have you tuning in, whether you are watching or listening. I will give you a heads up this episode. I'm going to go over a lot of stats, so it may be more beneficial to watch the YouTube video for this one if you normally listen to the podcast. However, I'm going to do my best to reiterate things so you catch it in case you are listening. This week, I want to talk all about the stats from November, kind of give my ideas on what happened, why it happened, and where I think things are going to go. I want to wait a bit longer to film this video because I did want the interest rate announcement to be released, which it was, so I'm going to touch on that as well. But before I go ahead and dive into all of this, if you're looking to buy or sell a house in Hamilton, use the link in the description below to book a call with me at a time that is convenient for you. But let's dive into this. I'm going to make myself smaller. Before I do that, there we go. Perfect. Boom. Let's dive into these stats. Get my little pen out and get rolling. So right off the bat, we can see from this chart, the residential activity and prices chart, which is my favorite go-to one. We can see the sales, the new listings, and the average sale price. So we can kind of see how things have changed from last month. Right off the bat, you're going to notice the average sale price did go down, which interestingly enough, in October, it actually went up. But in November, it came down. So we did see an increase, and now I guess we've seen a little bit of a decrease, and there is a few reasons. But let's stick to the chart at hand. New listings as well have declined, but sales more or less have stayed the same month to month. There hasn't been a huge amount of change in actual amount of sales, which we'll dive into a little bit as well. But let's start with the average price trend that we're seeing. So this month, the average price in Hamilton came out in $761,244. So that's down 8.8% from last year, 9%. So that's a pretty big drop. I know that they're predicting some large numbers in terms of drops coming up in the next year. So we're already at 8.8%. Interestingly enough, it's a much larger drop from the peak, but year over year, we're down 9%. One other thing I want to compare this to is last month, the average sale price, I wrote it down here, was $790,130. So it was about 30,000 higher. So that's where you see this drop. That's a difference of, 3.7%. So we saw the average sale price from 790 went down 3.1% to where it is now 761. So that's from October to November. So that's probably the biggest drop we've seen in the last 3 months, because even in August you'll see that the average sale price was higher. September it increased a little bit, October it went up a little bit, and then November it came back down. But we're now at the lowest average sale price that we've had year to date. So 761, that is your average sale price in Hamilton. I want to look at the amount of sales now. So the amount of sales at 425,000 for the month of November. Last month, I believe it was 455, and the month before that, I think it was around the same 450, around that mark. So we're consistently seeing the same sort of levels of property selling. I mean, a difference of 20 to 25 units a month isn't a huge deal. So that's staying pretty consistent. But when we look at the year over year, we're down 44% in terms of sales. So last November, we had 44% more sales. One other thing I need to point out about this number, 425 sales, this is the lowest amount of sales we've seen in a November in over 10 years. Okay, so just to give you an idea of how slow, I don't want to say slow, but how much things have slowed down from where they were, we're actually seeing less sales than we have in any month of November in the last 10 years. So let that sink in just to give you an idea of what these interest rate hikes have done to the market. We're going to jump into new listings. New listings, 791 new listings came up in November. So that's a decrease of 3.2% year over year. So we had more listings come up last November than this November. I have a theory why, which I'm going to explain. I think it makes a lot of sense, and I think once you hear it, you'll think it makes sense too. But let's look at how that changed from October. So the October, the amount of new listings was 956. November, it was 791. So that's a pretty good drop of new listings there. So a lot less coming on the market month over month. Part of the reason that I think things have slowed down in terms of new listings is you have to keep in mind that not every buyer is a first-time buyer or an investor. That maybe makes up 40 to 50% of the market. But the other 50% of sales that happen in a real estate market, generally somebody has to sell a property in order to purchase another one. So with the overall amount of sales dropping, less people are purchasing, meaning that those purchasers aren't putting their house on the market to sell because they don't have to sell because they didn't buy anything, if that makes sense. I'm seeing a lot right now where I'm working with buyers that when we do have to do offers, we are making them condition on the sale of their property, but they're just not finding things to buy right now. So their listings haven't come to market. So it's kind of having a direct effect on the amount of new listings. I hope that's good insight on that. Let's move into the inventory that has been sitting on the market. So in terms of inventory, one sec, I got to scroll down here. So the inventory, 1,278. That is an increase of 221% year over year. So that's a significantly big difference of inventory. So inventory is the amount of homes that are on the market, not ones that came to market, but in November, the amount that were on market, and 1,200. So it's just crazy to see that many homes sitting when we've been seeing, over the last 2 years, everything that's been going on. But this is, of course, playing into the supply and demand economic tool that you'll hear about, everybody talks about, is the supply is now high, like 1,278. It's 220% higher than it was last year. The demand is lower. So obviously that's having downward pressure on pricing. Then we have months of supply, which is at 3. Last month it was at 3.1. So that's not changed very much. The market's kind of trucking along. Now keep in mind that any months of supply, when that number is between 3 to 5, the market is balanced. If it's under 3, it's a seller's market. If it's over 5, it's a buyer's market. So right now, technically, we are in a seller's market. Not a seller's market, I apologize. We're in a balanced market, which I'd have to agree with, because if we look at the average days on market, we're 28 days on market. I know to some people this seems like an eternity, but when I got into the business, I was used to 60 to 90 days on market as an average days on market. So to see 28 days, when I see a number like that, I think, you know what, this is still a good market, because something you got to keep in mind is that average days on market number often includes the conditional period of the property. So if somebody buys a property and they have 5 days to get financing, that 5 days is included in that 28 days. So you have to keep that in mind, meaning that they are selling, a bit quicker than that, probably on average, probably closer to 22 days, 23 days. But that's how that stat goes. As well, months of supply, to give you an idea of where we were in that insane seller's market, in case you haven't been following month per month. When we were at the peak here in February, the average months of supply was, I think it was 0.7 or 0.65 or something like that. It ended up working out to about 3 weeks was that. And the way they calculate this metric, it's one of my favorite ones to follow. Basically, this metric is how long it would take every house that's listed on the market right now to sell if no other listings became available. So with the higher inventory, obviously we're going to see the months of supply increase. And then with the longer average days on market, obviously that month of supply is going to increase. And all of this has been affected by, the interest rate and really nothing else. That's the main factor, the main culprit in all of this. I want to go through this fairly quickly as well, because I think this is always fun to look at, as fun as real estate gets. How different styles of properties have been performing. So detached, semi-detached, row, apartment, and mobile. We're not going to focus on mobile. In fact, I don't even really like focusing on semi-detached. I wish they would just go ahead and combine it with row, because at the end of the day, an end-unit townhouse, in my opinion, freehold, is very similar to it. Like it is a semi-detached. So I don't understand why they break it apart. Maybe they want more numbers on this page. I'm not sure what their goal is. But if we look at it, the bulk of sales, so total sales, has been detached homes, making up the majority of it. So 274 out of 425 sales are detached homes, so over half. So people still are looking for detached homes. The smallest percentage was apartment at 30. So apartment styles have seen the least amount of sales. which is interesting to me because they're actually the most affordable right now. I know they do have condo fees, but if you're a first-time home buyer, I mean, some of these condo prices are fantastic. So with detached homes, I want to look at the average price specifically for detached homes. So the average price of a detached home right here, $819,000 compared to the overall average of $761,000. So as you can see, detached homes on average, oh, my lights went out here, are well above the price of the average market price. So there is, however, an 11% drop in detached year over year. So when we're talking 8.8, so 9% overall, the average price has gone down. Detached has gone down by 11.3%. So they're taking the biggest hit, with townhouses following closely behind at 9.3, and condos actually going up 6%. Holy cow. Look at that. 6% is a pretty big jump, especially when we're looking at an average price of 521,000. 6% is a decent amount of increase there. So that could also be a combination because it is a small sample size. Like, we're only dealing with 30 sales, which is down 66% from last year. So that's why you could be seeing a higher average sale price, is because the pool of data is 66% smaller. That makes sense. And then looking at the average sale price of a row or townhouse, $684,000. So that's well below the average sale price. But that would explain why detached homes are taking the biggest hit. I made a video talking about this specifically a couple of weeks ago, and I think it does still pertain to what we're seeing in the market. And that is that average price of detached homes are falling just because they're higher. They're the highest average price on the market. And right now, affordability has gotten crazy high with these raises in interest rates. So you're obviously going to see less people qualifying for that higher price point and not being able to afford detached homes. So the price of detached homes are feeling that pressure. And I want to show you something else. Keep in mind, I just realized this as I was looking at it. I didn't think of this before. But the average detached price we said was $819,000. If we scroll down to the most popular price ranges in Hamilton over the last 3 years, so we look at this year, the most popular price ranges in Hamilton are $600,000 to $800,000. So the average detached home price is higher than this, which explains why the bulk of the transactions are taking place in that price range, but also explains why detached are coming down, because they're higher than that high activity area. But if we look at this historically, this is pretty cool. 2020, 2021, and 2022, the most popular price point has been $600,000 to $800,000. So that's crazy. Obviously we saw it increase last year during the pandemic. It was when the average price was, well over $1 million. We saw that those performed well, but still that 600 to 800 was the highest pocket. So if you are looking to buy a house between 600 and 800, it looks like you have a lot of competition. If you're looking to sell a house and it's between 600 to 800, might be a good time to sell it. It seems to be the most popular pocket. So I wouldn't let that deter you. And obviously the sales fall off over 800 because qualifications, which kind of makes me want to dive into talking about the interest rate hike and what we saw happen there. So I'll leave the graph up so you guys can look at it while I'm talking. But with the interest rate hike, today they announced that it was going up 50 basis points, so their target was 4.25%. I thought they were going to do a quarter point today, maybe a quarter point next year, but it seems like they just went for it. They increased it by 0.5. What do I see this doing? Honestly, I don't think it's going to have a major effect. Like, there's already been a big beating going on out there in terms of qualifications and the interest rate. Like, sure, the stress test now is going to increase. You're probably going to be looking at 8.5% to qualify for a mortgage now with the stress test, but people have already been having to qualify for 8. So I don't think we're going to see an immediate effect from this, but I think a few months down the road, the pain's going to start to kick in. For people on variable rate, a little bit of advice for you. If you're already having trouble making payments on your variable rate, it's going to get harder, and rates aren't just going to jump back down very quickly. Like, you're not going to go from whatever your rate is, it's not going to come back down 2%, 2.5% quickly. This is going to be long and drawn out. And keep in mind that the longer these rates stay up, the more downward pressure that we start to see on pricing. So if you're going to be forced to sell from now, if you're going to be forced to sell because you just simply can't afford the payments in 3, 4, 5 months from now, it might actually be better to sell now, because you're going to get a higher price for your house now than you will down the road, assuming that we're going to continue to see this downward pressure that everybody is predicting. If you're variable, you're protected. Hopefully you don't have to renew this year. If you do, speak to a mortgage broker about your best options there, because these rates definitely have shot up on people that are renewing, and I have heard stories of people's payments going up quite significantly because of this. So just stay in touch with your mortgage broker, stay in touch with your realtor, try to get the best advice that you can in terms of that. But if you are facing a bit of a trouble situation right now, I would recommend you get in front of it sooner than later, because an extra 20 grand today is better than trying to float yourself a few extra months, and then you end up selling for less in the long run, and you might even end up having to do a quick sale, meaning you get even less money than if you had the time to take your time on the market and check that out. So I hope that was somewhat helpful. But anyways, I want to thank you guys again so much for tuning in each and every week. It's greatly appreciated. I love making these contents. I especially love making the monthly stats. If you have any questions or want more details, let me know. If you received this video in your emails because you're on my list, you also got the PDF in the email, so you can find it there. If you want this PDF, I think that I got my business cell phone number, and I have my email down below. You can reach out to me there as well if you want this PDF, whatever works best for you. Anyways, hope you have a great week, and I look forward to talking to you again next week.